Welcome back, and joining me for a closer look at what's played out on the market scene today is Robert Towell from Sasfin Securities. Thank you so much for your time, Rob. Lots that has been coming out in terms of earnings. Let's start off with Nvidia. That has really been the benchmark for market sentiment in the US markets for quite a while now. It did come out with results last night after the closing bell, and actually demonstrating strong growth still, surprising to the upside on both the top line and the bottom line. Does that seem like Nvidia has basically shrugged off deep-sea concerns?
I don't think 100%, but I think they were really solid numbers. And if you hear what the CEO said, he's still seen massive demand for their chips, and also for other parts and different type of chips as well. So the chips that go into some of the data centers, which are not at the highest end Blackwell chips. So there's demand for not just the Blackwell chip, but for other chips as well. And then they also, have corrected some of their production of that Blackwell chip. So, I think it was a very, very good set of numbers. The market, I don't know how much more the market wants. The numbers were relatively spectacular. But, the market is looking for, it's had such a good run over the last 2 or 3 years. They're just looking for absolutely perfect numbers and just 100% perfect upside, which you just can't get. So initially the market traded negative after close, and they opened up positive this morning, but now it's back down to about 3% down, but no huge swings in the share price. And I think that also stabilizes some of the worries around AI. So I think they were a good set of numbers, and it takes a little bit of the stress out of the AI sector.
Well, a company that had a huge swing in its share price today was Motus. It released its interim results. The numbers quite interesting. We did have revenue declining about 2%, and then the bottom line up marginally 1%. And actually, pleasingly, they did increase the interim dividend by 8%, but that stock still nosedived by more than 13%. What choked investor sentiment here?
It's a very difficult sector of the market at the moment. Consumers are under a lot of pressure. So, it's a growth issue and how much they can actually sell into a weakening consumer. And I think that's what the market was worried about. They did a really good job. They managed to, still put a few deals together. They've just done a deal with Tata. They're going to be bringing Tata vehicles through. So I think that's very, very positive for them. Also, on those level vehicles, they're much lower priced vehicles. So you're starting to see that they're taking some of their high end car brands down a little bit to try and get the consumer that's under pressure to buy more cars at the lower end. So I think they're doing a lot really good. I think there's a slight overreaction today on the share price. I think long term they're in a very good position in South Africa. I think that you'll probably see price targets from the analysts are around about 170 rand. So they've still got a lot of upside. And I think that if you start to see interest rates come down slightly and a continued improved South Africa, and if the South African economy in 2025, this slight sell-off in the share now is a good entry point.
Well, talking about consumer pressure, Truworths definitely saw that in its Africa operations. Of course, also coming out with a 6-month earnings. We did have a group of merchandise sales up 2.5%, but that bottom line, they're giving up almost 5%. But investors still went shopping. That stock, the last time I checked, had climbed about 3%. How did you digest those numbers?
So they're weak numbers. I think across the board, the numbers are worse than the retail sectors in every area they're in. So if they were in the UK, they're slightly below the UK retail numbers. So they were relatively weak numbers. The share has dropped about 25% since November last year after Black Friday. So it has come down quite substantially. And I think that the numbers were expected to be weak, and therefore you saw a little bit of buying coming to the share, because it has dropped from about 112 rand to this low level of about 80 rand. And if you go back in time, just before COVID in 2019, the share was 80 rand as well. So if you've held it from 2019 to now, you've actually made virtually no money. In between that, you could have got a 4-bagger that's gone up 4 times in between that. But at long term, they're battling for growth, And I think you see that in these numbers, that the growth is just not quite there at the moment.
Another retailer that came out with numbers today, an 18-week trading update, is SPAR. They started off their statement by flagging challenging trading conditions across its geographies. I did see their group turnover actually seeing a slide, the stock plunging almost 7%. What did you make of what SPAR has produced?
The SPAR's obviously had very big difficulties in Poland, and they were selling that asset. After they said that they have sold that asset, you saw a good increase in that share price, but I think it was a little bit exuberant. And if you take a look at these numbers, you can see again that the retail sales numbers that they got in all of their sectors as well, in Ireland, in Switzerland, in South Africa, were below their retail levels in those countries. So they're underperforming, which suggests that they're losing market share. If they continue to lose market share, that's problematic for them. One or two positives in the numbers, that it looks like their margins are coming back. They're not discounting as many, they're not having as many discounts on their products, and they're still building up their own house brand. So that's increasing the margin. So I think that was quite positive. Another issue was that their capex should come down now after Poland has been closed off. And they had a very big problem with their SAP implementation in KwaZulu-Natal, and that's slowly unwinding as well. So I think that the share ran a little bit too much after they sold Poland, and this is just a check to say still a difficult environment, and they got a lot to do still, and they're losing market share. So I don't think I'll be a buyer just yet, but there are positives coming through on the SPAR numbers, especially that margin increase.
Right. Well, Rob, let's get to your stock pick for today. What are you hanging your hat on?
So again, I still like South African banks if you're taking a positive view on 2025 economics, and our pick there is Capitec. It's well positioned as credit losses start to improve, especially in the lower LSMs. You're starting to see those credit loss improvements and ratios really improve a lot, and they're very well suited in that sector. And I think that they'll carry on performing and still taking market share from the other banks. So that's our top pick in the banking sector, but we do like the sector as a whole.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today. That was Robert Towell from Sasfin Securities.